We have some breaking news you need to know ASAP as a Tesla stock investor, as a human on this world, or as anyone with a portfolio. This could affect your money, and it already is here on the day today. So we're going to get into that, all of your Tesla stock news, look at the option activity, what is coming next for our markets. If that sounds like something you want to be a part of, well, stick around. In the meantime, hit that like button, as well as subscribe to the channel. The best prescription for your complication is by far a subscription to the channel. So let's kick this video off with the breaking news. US President Biden has just been briefed by his national security team on updates regarding the situation in Israel and Gaza. This comes after a senior Israeli official has stated, quote, "Tonight is the night," and that the full-scale invasion of the Gaza Strip will begin in the coming hours. Currently, the time over in Israel is 9:05 p.m., so it's nighttime. If this is really going to happen here in the next couple of hours, it's probably going to be once daybreak does happen, which is going to be some point tonight around midnight Eastern Standard Time. So I will be able to give you guys an update at that time if it does actually happen. We want to watch how this does affect equity markets. Today, markets are reacting pretty aggressively. Stocks are selling off from their highs. At one point, the QQQ was up over 1% until this news came out that Israel is starting their ground offensive, quote, within the coming hours. Oil, most notably, is reacting as well. USO is up 2.67%, as I have said many times before. And again, for redundancy's sake, I will repeat myself. 20 to 30% of the world's oil supply flows through the Strait of Hormuz. So if that were to be cut off or restricted in any way, shape, or form, that will have big financial implications for each and every single one of you. Your gas at the gas pump could become a lot more expensive. It has huge implications for a possible recession as well, as that would really hurt consumer spending, but also inflation. Because, I mean, oil is one thing, but whatever you're watching this video on, whatever you are eating today, whatever you are traveling to, everything is affected by oil in one form or another. So this has implications for higher inflation and potentially a much weaker economy if this were to get bad. The question is, at this point, does this conflict grow into something much larger? And that's really 50-50 at this point. I'm not sure. If it does, well, by Monday, we're probably going to know if this incursion does actually start tonight, as Israel claims it is going to. But last night, technically today, but early in the morning, around 1 a.m., the U.S. sent 2 fighter jets to strike Iran's munition facilities in eastern Syria. This is what it looks like. We have no information on whether anyone was injured or eliminated or hurt in one form or another. But this was a direct attack against Iran. So you have that boiling in the background as well. From my knowledge, from everything I can gather, we have not heard a response from Iran. That is very, very escalatory, though. I'm sure there's going to be something that comes out of that. And that is just, again, not great. There is also some reports that Houthis in Yemen have launched ballistic missiles and drones toward Israel within the last hour, but so far we are unable to verify this information. 4 minutes ago, breaking news says columns of Israeli tanks are approaching the Gaza border fence north of Beit Lahia and Beit Hanan. Again, I would like to be very clear. If there is no escalation with this conflict coming on Monday, if Hezbollah does not get involved, if the US does not get involved, if Iran does not get involved, the markets are probably going to get over this coming on Monday, and the markets might actually rally big time off of this because the uncertainty is kind of gone. If Israel finally does make their incursion tonight and nothing happens, well, we know the outcome of that. If there is retaliation, that's where you get into a big problem for our markets. Good news is today TLT is in the red. TLT is down 0.63%, so it doesn't look like there is a fear move into bonds today. That is actually great news, because if people were really fearful out there, you would probably get investors buying the bonds. You would probably see yields actually coming down. But that's not happening. Gold, on the other hand, is rocketing higher, up almost 1% on the day. We've been looking for this breakout in gold for a while now. It's been coiling very much in a bullish formation. You are getting that breakout. If, again, the situation does get worse, gold will continue to break out, and gold is probably the #1 safe haven asset. So there is fear out there in financial markets due to this conflict. We did have some economic data this morning in which came mostly in line, especially on your core PCE month over month. We were expecting 0.3%, and that is the number we did get. So it's one of those situations where it could have been worse, but it is still pretty high. That is 3.6% on a 12-month annualized basis. We wanted to see 0.2%, maybe even 0.1%, but again, it could have been worse. Personal spending was really the highlight of the data this morning. Personal spending kept up and then some, rising 0.7%, which was better than the 0.5% forecast. So the soft landing, it looks like the most, consensus opinion at this point. The data just is not supporting a recession. Now, some of you guys might say we're already in a recession. I mean, consumers are not feeling that great. Auto loan delinquency rates are at the highest level they have been since 1994, higher than the great financial crisis when the unemployment rate was almost 10%. I get it. People are not feeling great out there. You could argue maybe there's more credit cards out there. People are spending on debt. Markets don't care about that. The markets are seeing soft landing, and they are running with it. That's why stocks, for the most part, are doing okay today, at least at the time of recording this video. You're not seeing that same mass sell-off in the markets as you have recently. A lot of that could be due to Amazon having good earnings yesterday. Next week is going to be a big test for markets as well. You are going to get Apple earnings on Thursday. That is going to be the last big earnings of this earnings season. These other companies are important. They're well-known names. They'll move their certain sectors, but Apple is really the company in which if you've seen something like Google, if Apple theoretically dropped 10% because they missed earnings pitifully, which I think is actually a pretty strong likelihood that happens, well, you're going to see a lot more downside for the broader indexes. The percentage of stocks that are trading above their 50-day moving average is really bad. You're down here at about 15.5%. If you pull up a 5-year chart, you're trading down close to your October 2022 lows, in which at that point you hit about 10%. So what this really suggests to me is you're probably going to get a flush out of your big tech names, of your indexes, and then you'll see everything kind of rally back together. Tesla stock in the land of options is not doing that great today. You have seen 528 trades worth a total of $283.42 million with a positive order value of 21%. This comes off of yesterday's very disappointing number of about 15% positive order value with $1.81 billion worth of option activity. So today looks like a smaller day as far as dollars heading into Tesla options, but it is another pretty rough day for the bulls. Your AI investor sentiment has also flipped to be quite bearish at this point. As of October 25th, 2 days ago, 29.3% of investors were bullish, 27.5% of investors were neutral, and 43.2% of investors are bearish. That's a big jump from last week's number of 34.6% of investors that were bearish. The VIX has been steadily rising recently, coming off the lows you've seen back in early to mid-September around 12, now at $21.68. You're up $1 here today on the VIX, or up about 5%. So even though the NASDAQ is still, at the time of recording this video, slightly in the green, the fear is definitely growing out there on Wall Street. If we take a look at the yield curve inversion, it is continuing to uninvert. You are only inverted 0.16 basis points, and what you can see throughout history is when you actually start uninverting is normally when you get pain in the markets, and that is precisely what has happened recently. Once you actually cross above this black line and become a more normal yield curve again, you actually do fully uninvert, that's when your recession stop clock should be starting, because normally you head into a recession just months after the uninversion. But this whole situation in the Middle East could actually force the Fed's hand to be a lot more dovish and potentially accommodate the markets a lot more, especially since there is a big implication for energy. The Fed knows full well what the possible outcome here is. If you get sky high energy again, it's not going to have that same inflationary effect like it did in 2021 and 2022. It's more so going to have the effect on the economy a lot more negatively, right? You could get pushed into a recession quickly if energy did go higher, in which just continues to go higher at the time of recording this video. White House's John Kirby says the U.S. is not interested in conflict with Iran. This is coming across the newswire I have in front of me. Another big story of the day today is Jamie Dimon, JP Morgan's longtime CEO of 18 years, is going to sell some of his own company stock for the first time ever. He's never sold any JP Morgan. He intends to sell 1 million shares out of the 8.6 million shares that him and his family own, subject to the terms of a stock trading plan, the bank said in a regulatory filing. The sale would fetch nearly $141 million, with a remaining stake of about $1.07 billion. Based on Thursday's close, it will account for less than 10% of Dimon's holdings, which also include performance shares that have not yet vested and stock appreciation rights. Dimon has an estimated net worth of $1.7 billion according to Forbes. Dimon says he will sell the stock for financial diversification and tax planning purposes, and he continues to believe the company's prospects are very strong. That's not stopping a lot of people from speculating if JP Morgan potentially has a problem, the broader banking sector, or maybe even just the economy heading into 2024. This is also adding to some pressure and some worries out there, especially in the banking sector, as JP Morgan stock is down quite a bit today off of this news. Let's now get into all of your Tesla stock news you need to know today. Ford CEO said on their earnings call yesterday, quote, "A great product is not enough in the EV business anymore. We have to be totally competitive on cost, but Tesla and Elon Musk have provided a silver lining for the company. Tesla actually gave us a huge gift. With a laser focus on cost and scaling the Model Y, they set the standard, and we are now making real progress on our second and third cycle EVs that are in the midst of being developed today as we get closer to the introduction," Farley said on Ford's Q3 earnings call yesterday. Sawyer Merritt says the UAW and GM negotiated through last night until 5 a.m. The UAW submitted a new offer. A deal might be close. Elon Musk still in talks for Tesla to invest in Indonesia, claims the president. This, in my opinion, is probably not true based on the delay you're seeing of Giga Mexico. I doubt Tesla is in any rush at all to make another commitment for another factory in another country. But if this were to be true, that does show you a lot of confidence Elon Musk has in that particular region. S&P Global Mobility is reporting Tesla is the most popular vehicle for new fleet EV registrations, with the Model 3 being in first place with 28,252 registrations, the Chevy Bolt coming in second at 19,502, and the Tesla Model Y coming in at 11,149. This could actually be exciting news. X wants to create a newswire service called X-Wire, which would rival Cision's PR Newswire, according to Bloomberg. Upgraded Model 3 debuts at the scenic Forest Valley at Jewel Changi Airport in Singapore. General Motors' self-driving unit Cruise has suspended driverless operations across all fleets, no longer just in California. Tesla has launched a new stealth gray color for the Model S and Model X in the US. It's a zero added cost color. The old midnight silver metallic color has been discontinued on the Model S and the Model X. And look at that! Something that I'm very excited about here in the US coming next year as the Fed does lower rates. Tesla has increased the price of the Model Y Performance in China by 14,000 won, about 1,900 US dollars. And there's no change of price for other trims. But Elon made it very clear on the earnings call. It's all about the monthly payment. As the Fed funds rate does come down and yields on the treasuries do fall, that's going to mean lower interest rates. That's going to mean Tesla can sell their vehicles for a higher price. This is something I don't think anyone is expecting for 2024, and it's something you should strongly consider as a possibility. Tesla has increased the price of the Model Y long range in the US by $500 to $48,990. This is incremental. It's not going to help or really hurt anything. It might help obviously a little bit, but we're going to see much bigger price increases, in my opinion, for 2024. Ford lost $36,000 per EV unit sold in Q3. Ford says the 41-day UAW strike cost them a total of $1.3 billion, about $31.7 million per day, and canceled production of 80,000 vehicles. The new UAW labor deal will increase Ford's labor cost by $850 to $900 per vehicle, reducing margins by 6 or 7 tenths of a percentage point. And sales of the Model 3 Highland have started in Italy as far as Monday. Now take a look at this chart of the NASDAQ 100. The index is still trading above its average valuation multiple. The average 10-year valuation multiple was around 26 times. Today, you're still trading at 31 times. That's because your top 10 largest companies are the ones that are really keeping this multiple higher. So under the surface, it's not nearly as richly valued as this chart would suggest. Again, a big reason why I do think a flush out of big tech is coming, and then probably a rally of the entire markets. 2023 has really been a year of big tech, safety trades, right? Hiding out in stocks that are not dependent on the course of Fed funds rates. 2024, I think it's going to be all about the lowering of Fed funds rates and who benefits from that. Tesla's going to benefit from that. Small and mid-cap stocks are going to benefit from that. I think you want to be positioned in those areas of the markets, but I'm not a financial advisor, and I could be wrong. Now, if we take a look at Tesla on the charts, you're still trading under your 200-day moving average. That's not exactly great. If you look at something like the NASDAQ, you look more so similar to the NASDAQ now. It almost looks identical to a Tesla. Now, the NASDAQ is still above its 200-day moving average. I think that will change. I think that will come down in due time. As far as the course of Tesla ahead, it really just depends on what happens with the broader index. Again, I think investors are going to position heavily into Tesla heading into the end of 2024. But if this crisis in the Middle East causes a bigger problem, or if, energy starts to really rocket, or Apple has bad earnings next week, those things are going to have a big effect on the index, and that's going to affect Tesla stock as well. So again, I think 190, 180 could be a realistic possibility. I think 150 could also be realistic if you do see a big downside move in the broader markets. Anything under that, you're going to be in deep bear market territory for the broader indexes. So I would be a lot less confident saying those prices are coming. But 180, 190, that's probably going to happen. As low as 150, you could argue that's probably a 50-50 probability. So that is going to go ahead and conclude this video. Here is your update for the day today, a broad, inclusive update on everything you need to know. If you like these kind of videos and you want to stay up to date with everything that's happening in the markets each and every single day, hit that like button as well as subscribe to the channel, as well as check out the link down below in the description of this video for the trading community. I send out all of my trades in real time, and there will be a course coming out, how to trade different strategies, everything you need to know on trading from A to Z, as well as a bunch of other things. We're going to have a pre-sign up for that. All kinds of stuff coming here pretty soon. So if you guys want to be a part of it, well, and get that for free, if you're a part of the trading community, those will be sent out over on Patreon whenever that course is done. So check it out if you guys want to be a part of it. Nonetheless, enjoy the rest of your day and nights and weekends, and I will see you in the next one.